Got lots of housing data out today. Building permits continue to rise, but housing starts trending down for the first time in 4 months. Builder sentiment keeps surging, but not necessarily when it comes to single-family housing. So to make sense of the highs and the lows in today's data, we've got the perfect guest on this, the CEO of the National Association of Home Builders, Jim Tobin. Jim, thank you so much for coming on our show today. I know that in 2022, after a big drop in home builder sentiment, you said that we were heading towards a housing recession. After all of today's data, how would you describe what we're heading towards?
I think we're heading towards a housing renaissance. I think 2024 is shaping up to be that pivot year where we leave the doldrums of kind of the post-COVID slowdown, and we really pivot into the next 5 or 6 years in the housing market, where we're going to see some great growth. We're going to see home builders meet that pent-up demand for single-family and multifamily housing. So I'm very optimistic. The headline numbers that we saw when it comes to starts and sales and permits, I think we have to understand we had some bigger numbers earlier in the late half of 2023, and now we're looking for 24 to really take off.
And Jim, let's talk about affordability, though, as an issue. Now, I'm looking at the 30-year fixed here, Jim. According to Mortgage News Daily, says it's now at 6.89%. I mean, it's better than 8%, Jim, but it's still higher than a lot of people are used to. How does that impact demand, Jim? And where do you see that headed from here? Where are we in 6 months?
I think in 6 months, we're going to see mortgage rates even lower than we are now. We watched the Freddie Mac numbers, and they are showing that we are closer to 6.5 than we are to 7, which is a good sign. We're already starting to see across the country that people are coming off the sidelines. As you are the NAHB Wells Fargo Housing Market Index, which came out yesterday, the biggest jump in that component, we moved up 7 points in total, but the biggest component jump was in traffic, which means people are starting to get out of their homes and get into model homes to look at housing, maybe setting themselves up for a spring buying season, readying themselves for those lower rates. So I am encouraged by the trend. We're down just over the last couple of months. We're down over a full percentage point in mortgage rates. And then when you couple that with builder incentives, people are getting actually below 6%, whether it's mortgage rate buy downs or price cuts. Our builders are doing everything they can to get those buyers that are in the marketplace into those new homes.
So I'm curious about exactly what you just said, that rates are going to be lower in the next 6 months. Where are you seeing evidence that people aren't holding on to their mortgages, holding on to homes in anticipation of lower rates in those next 6 months?
Well, I think that the world is getting ready to realize that we're no longer going to back those 3% and 4% mortgage rates. And there does need to be a generational shift here that the mortgage rates in the 5 for the long term are still really good low rates for a long-term investment like your home. So I think people are going to recognize that. Again, 6 might not be quite the number they're looking for, but they're going to start moving off those sidelines. I'm convinced of that, especially as you start getting down lower towards that 6. And again, with incentives or there's government programs that can help people get into homes, I really think that we're going to start unlocking those people that are rate locked in their existing homes. We're going to start freeing up the existing home supply, which is going to further add to what the home builders are putting on the market now.
And Jim, I'm curious too, just in terms of supply, can builders now, Jim, can they develop new homes faster than they used to?
No, actually, it's much slower. Governments, local governments really control the land use process and the land development process, and then they control the permitting process. So all of that is in some markets, local governments are very much a partner with home builders and development. And many markets, they are not, quite frankly. And if this is the year where we're going to begin to pivot into a stronger growth cycle where housing can meet that pent up demand for single family and multifamily housing, then we need local governments to help get out of the way, find ways to reduce permitting times, move land development costs along, find more land for development. That's what we need in order to put more supply on there. And we also need our partners in the supply chain, whether it's lumber or wallboard or shingles. We need those supply chains to be ready and listen to us that we are about to come into a pretty high growth time and get those supply chains ready so we don't go back to where we were in 2019, 2020, and 2021 with high lumber prices and slow delivery times on key products for homes.
And Jim, we've talked with you in the past about another challenge, which is labor. I'm just curious to get an update there, Jim. How does that look? Is that still a challenge for the home building industry?
Still a challenge. We are consistently about 400,000 jobs short year over year, month over month in the construction industry, and that will continue to be the single biggest drag on our builders. I'm actually here with builders in the Midwest. I'm actually in Fargo, North Dakota. Yes, it is cold as you would think. As it looks on the thermometer, and I will tell you that they are very excited about the future here in Fargo. It's a high growth area. People want to move here. However, labor is the number one issue I've been talking to them about, and just the lack of labor. And if you can find labor, it's cost, and then the time it takes to get them on the job site. So labor is always going to be an issue, and that's why we need to make sure we're investing in trades and getting our young men and women invested in working in the trades, because that will help build affordable housing in the future.
Jim, I am selfishly seeking your advice on a first-time home buyer situation here. We know that single-family housing starts fell 8.6% for December, despite that pent-up demand. What is your single biggest advice for someone who's seeking single-family housing as a first-time home buyer in this market?
I think now's the time to get out and look at a new home. As the existing market, which is traditionally where first-time home buyers look at an existing home, don't be afraid to look at a brand new house. They are on the marketplace, in the marketplace, and it's time to look at new construction. I will also say, for a first home buyer in particular, there are government programs that can make low down payments available to you, or even zero down payments. There is an opportunity out there. Do not be scared off by 10 or 20% down payment options. The government is here to help specifically new home buyers realize the dream of home ownership. So now is the time to start looking and get ready for not only lower rates, I hope in the spring, but also that now is the time to really take a look at housing.